the no par rate. That's our topic for this morning's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. I want to talk to you a little bit about some of the data that came out from Mortgage Bankers Association yesterday. And we covered most of that data yesterday, but I want to focus on one particular point. Interest rates last week rose from 5.65 to 5.98%. And that 5.98% on average was with a point, customers paying a point. Now that kind of leads into this question, why is it so hard to find a no point or a 0 point rate right now? And there's a really great answer right now. Now, in mortgage, we use a term with customers a lot. We call it a par rate, but that's not quite accurate. A par rate means that a loan that is made for a certain amount is sold for a certain amount. So, for example, if you originate a $500,000 loan, that gets sold to the investor for $500,000. But if that happened, how would anybody make money in the process of originating a loan? They wouldn't, right? So the par rate is actually a zero cost or 0 point rate to the customer. But what's actually happening is that rate and that mortgage is getting sold at somewhere around 102 or 103 to the investor. So everybody along the way can get paid. Who is everybody? The loan originators, the wholesale lenders, the Fannie Mae or Freddie Mac, or whoever's securitizing the loan, the servicing company. Everybody needs to get paid along the way. So a $500,000 loan is actually sold for around $510,000 or $515,000 to the investor. But that's hard to do right now. Now think about this. If you're buying a $500,000 loan for $510,000 or $515,000, and you're paying that premium to make sure that everybody gets paid for making the loan, well, you as an investor, how do you get paid? Well, you make up that money by a yield on the long-term, the long-term loan. It pays out over time, so you're getting a yield on that loan. So that's how investors make up their money, on the yield. But what happens if that loan gets paid off early? Let's say, what happens if the Fed and what they're doing right now to fight inflation begins to work and interest rates come down in a year? What happens then? Well, you guessed it, people are going to refinance, right? So that loan that investor paid a premium on, say 102 or 103, $515,000. Well, if that loan refinances because rates are lower, the investor is going to be losing money in that short period of time. So what does this tell us? This tells us that the market is agreeing with us, that we think, and the market thinks, that in a short amount of time, relatively speaking, within the next few months to a year, we see interest rates coming down as inflation starts to come down as well. And the market agrees with us. Investors are making sure that they're charging a premium up front for rates to make sure that they're not losing money on their investment. Now, speaking of investors, in the mortgage bond market today, or the bond market and mortgage bonds specifically, mortgage bonds are up 39 basis points right now. Just a little while ago, they were only up about 20 basis points, so mortgage bonds are moving up. The 10-year yield is down about 8 basis points, trading at 3.07. So what that means for mortgage rates today, mortgage rates are going to open better than what they were yesterday, but let's not get too excited because mortgage bonds are trading in a very, very wide range of technicals, about 250 basis points wide, and there's a lot of room to the low side of that for towards support. So while we'll take it, and we'll take probably some better rates today. Look, a butterfly flapping its wings can cause a hurricane. So any little bit of news can cause a pretty major shift. And even though the markets are calm right now, chaos theory is true. So we'll be on the lookout for any news. There's not a lot of news scheduled for today, so nothing that should move the market that's scheduled as far as news goes, but we'll make sure to let you know. Now that's everything that we've got for today. I hope you have a wonderful day. Listen, stay positive. Like, comment, and subscribe. If you have any questions about what we talked about today, please leave a comment, and we will see you tomorrow.